What's happening, everyone, and welcome back to Microsoft Sphere. The news cycle is absolutely on fire, and we've got a rapid-fire rundown of the updates you absolutely cannot afford to miss. Get ready, because the world of tech, policy, and innovation is moving faster than ever, and we're here to break it all down for you. From significant leadership shifts to groundbreaking legislative moves, we're diving deep into the stories that are shaping our future. Stick around, you won't want to miss a second of this. First up, a major shakeup in leadership that could redefine digital experiences across a massive region. We're talking about key appointments that signal big ambitions and strategic direction for a global tech giant. Then, we're heading to the halls of Congress, where a monumental piece of legislation is making a comeback, potentially changing the landscape of an entire industry. This is a move that could have widespread implications, touching on economic opportunity, justice, and the very fabric of how we regulate certain markets. Get ready for a deep dive into the policy that could reshape everything. After that, we're pulling back the curtain on one of the most influential companies in software to see who's really pulling the strings and what it means for the market. We'll explore ownership structures, recent insider trades, and what the big players are doing, giving you the inside scoop on where this tech powerhouse might be headed next. And finally, we're heading into the critical field of health, where new approvals could mean life-changing treatments for countless individuals. We've got the latest on crucial regulatory decisions that are set to impact patient care and medical innovation. It's a packed show, so let's get right into it. Don't forget to smash that like button, subscribe, and ring that notification bell so you never miss an update. A new leader takes the helm. Get ready for a significant leadership transition that's poised to reshape digital experiences across a vast and dynamic territory. Adobe has just announced a pivotal appointment, naming Ben Goodman as the new president of Asia Pacific, APAC, and Digital Experience Japan business. This move is more than just a new face. It's a strategic play by Adobe to bolster its presence and drive growth in one of the world's most rapidly evolving markets. Goodman steps into this crucial role, reporting directly to Stephen Frieder, Chief Revenue Officer for Adobe Enterprise, signaling the high importance placed on this region. Frieder himself highlighted Goodman's extensive leadership experience, stating, "Ben's leadership experience aligns perfectly with Adobe's ambitions in APAC and Japan. He brings a strong vision for growth, a strong record of delivering customer value, and a proven history of building successful teams across this diverse region." This endorsement underscores the confidence Adobe has in Goodman's ability to navigate the complexities and capitalize on the opportunities present in the APAC and Japan markets. With over 2 decades of experience driving transformation within multinational and regional organizations, Goodman is no stranger to high-stakes leadership. His background includes a significant tenure at Okta, where he served as Senior Vice President and General Manager for Asia Pacific and Japan, overseeing the company's regional operations and charting its growth trajectory. Notably, this appointment marks a homecoming for Goodman, as he previously held the position of Managing Director of Digital Experience Sales in APAC during 2019 and 2020, giving him intimate knowledge of Adobe's business and the regional landscape. Goodman expressed his enthusiasm for the new role, noting the region's embrace of innovation. APAC and Japan are emerging leaders in adopting and scaling innovation like AI, and businesses are looking to seize this opportunity to deliver highly relevant and engaging customer experiences. I am energized at the opportunity to foster Adobe's collaboration with our customers and partners to drive experience-centric growth. This statement emphasizes Adobe's commitment to leveraging cutting-edge technologies, particularly AI, to empower businesses in creating superior customer journeys. The company is doubling down on its strategy of customer experience orchestration, CXO, integrating creativity, marketing, and AI to deliver intelligent, scalable, and connected experiences. By equipping brands with its category-defining innovations, Adobe aims to be the catalyst for measurable growth, enhanced creativity, and significant impact for its clients. The market reaction to this appointment is likely to be closely watched, with analysts keen to see how Goodman's leadership will translate into tangible business outcomes and market share gains. Industry insiders are particularly interested in how his return to Adobe and his deep regional expertise will accelerate the company's digital transformation initiatives across APAC and Japan. This strategic leadership reinforcement signals Adobe's intent to deepen its engagement with customers and partners, driving forward its vision for experience-led growth in these critical markets. And that's just the beginning of our deep dive today. Stay with us as we pivot from corporate leadership to the corridors of power, where a major legislative push could change everything. Federal cannabis reform on the table. In a move that could signal a monumental shift in federal policy, the MORE Act, the Marijuana Opportunity Reinvestment and Expungement Act, has been reintroduced in the U.S. Congress. This comprehensive legislation aims to fundamentally alter the federal stance on cannabis, proposing to deschedule the substance entirely and expunge past convictions. Spearheaded by Congressman Gerald Nadler, and with co-sponsorship from key figures like Cannabis Caucus co-chairs Dina Titus and Ilhan Omar, along with House Committee on Small Business Ranking member Nydia Velázquez, the bill represents a significant push for federal cannabis reform. The core of the MORE Act is its proposal to remove cannabis from the Federal Controlled Substances Act. This action would effectively end federal prohibition, allowing individual states the autonomy to legalize and regulate their own cannabis markets without federal interference. Furthermore, the bill includes provisions for expunging federal records of individuals with prior cannabis-related convictions, addressing the long-standing social justice implications of the war on drugs. Congressman Nadler emphasized the urgency of aligning federal law with public sentiment and state-level actions, stating, "I am proud to reintroduce the MORE Act today." As more states continue to legalize marijuana and public support increases, federal laws must catch up and reverse failed policies criminalizing marijuana. He further added, "It is long past time to decriminalize marijuana at the federal level, expunge marijuana convictions, and facilitate resentencing, while reinvesting in the communities most adversely impacted by the war on drugs." This sentiment was echoed by Representative Dina Titus, who noted, "It's time to modernize our laws to reflect the reality of cannabis use in the United States, recognize the legitimate industry that has emerged, and fully embrace the medical benefits of the plant." Representative Ilhan Omar highlighted the disproportionate impact of drug laws on communities of color, stating, "The MORE Act will decriminalize marijuana at the federal level, clear records, and reinvest in the communities most harmed by these failed policies." Representative Nydia M. Velázquez underscored the bill's focus on justice and economic opportunity, particularly for those communities most affected by past policies. The potential impact of the MORE Act is far-reaching. Beyond descheduling and expungement, it aims to foster economic opportunities by reinvesting in communities that have been disproportionately impacted by the war on drugs. Acua Amining from the Center for American Progress noted, its provisions also prioritize reinvestment and economic opportunity for those most affected by decades of criminalization. We urge Congress to pass this long-overdue legislation and take a decisive step towards ensuring equity, justice, and opportunity for all Americans. The reintroduction of this bill has ignited discussions across various sectors, from the burgeoning cannabis industry to criminal justice reform advocates and policymakers. Analysts are closely watching the legislative process, anticipating potential economic benefits, changes in law enforcement priorities, and the broader societal implications of federal cannabis legalization. The convergence of increasing state-level legalization and growing public support suggests that federal reform may indeed be on the horizon, with the MORE Act serving as a key legislative vehicle for this transformation. Now that we've covered the legislative landscape, let's shift our focus to the financial heart of the tech world. We're going to explore the ownership of a major software player and see what the big money is telling us. Decoding Adobe's ownership landscape. In the dynamic world of software giants, understanding who holds the reins is crucial for gauging a company's trajectory and investor sentiment. Adobe, a titan in creative design, digital media, and enterprise document management, with flagship products like Photoshop and Creative Cloud, is currently valued at approximately $151 billion, though its stock has seen a notable dip of over 37% in the past year due to softening enterprise demand and intensified competition. Despite these headwinds, Adobe maintains formidable financial health, boasting gross margins near 89% and EBIT margins around 37%, largely attributed to its successful transition to a subscription-based model for its Creative Cloud. The company's ongoing investments in AI-driven tools, such as Firefly, are also seen as pivotal for its future growth. The ownership structure of Adobe has evolved significantly from its early days. The stock is now predominantly held by institutional investors, index funds, and large active management firms. Recent insider trading activity shows modest selling by some executives, while certain funds have increased their exposure, creating a mixed sentiment among investors. A deep dive into these ownership trends and trading patterns offers valuable insights into how major stakeholders perceive Adobe's current standing and future potential. For instance, Renaissance Technologies, led by Jim Simons, made a significant move last quarter, boosting its Adobe stake by over 850% to approximately 547,000 shares, valued at $212 million. This substantial increase is interpreted as a strong vote of confidence in the company's prospects. Similarly, Gamco Investors, managed by Mario Gabelli, grew its position by about 191% to nearly 3,000 shares, suggesting selective optimism from a value-focused investor. Gotham Asset Management, under Joel Greenblatt, also increased its holding by nearly 190% to around 73,000 shares worth $28 million, signaling a belief in Adobe's long-term upside from a fund known for disciplined value investing. However, the picture is not entirely uniform. While giants like Vanguard and BlackRock maintain stable ownership through their index funds, active managers present a more divided view. Capital World's sharp increase in its Adobe stake indicates strong confidence in the company's long-term outlook, contrasting with notable reductions by Norges Bank and PRIMECAP, which suggest a more cautious stance. This divergence among active managers highlights market uncertainty regarding Adobe's ability to quickly reignite its growth momentum. Insider activity, while not signaling massive sell-offs, has leaned towards modest selling, with several executives reducing small portions of their holdings in July at prices near $372 per share. Although these trades are not large enough to significantly alter ownership, the absence of insider buying is noteworthy. It may suggest that company leadership is hesitant to increase their personal stakes at current price levels, sending a cautious signal to the broader investor base. Taken together, these shareholder trends and insider activities paint a picture of a market that is cautiously observing Adobe, rather than outright abandoning it. The substantial holdings by passive funds provide a stabilizing influence, while the mixed signals from active managers and the modest insider selling indicate a period of watchful waiting. Investors are keenly focused on how Adobe's AI initiatives and its robust subscription model will counteract the slowdown in enterprise demand, and whether overall market sentiment will shift more favorably in the coming quarters. With a clear picture of Adobe's internal dynamics, let's now turn our attention to the vital advancements happening in the realm of health and medicine. European Commission greenlights key oncology treatments. The European Commission, EC, has recently announced a series of significant approvals for oncology therapies, marking crucial advancements in cancer care across Europe. These decisions, based on pivotal clinical data and expert perspectives, are set to impact real-world patient treatment and the broader landscape of medical innovation. Among the key approvals is nirogacestat, Ogsiveo, which received EC approval for adult patients with progressing desmoid tumors requiring systemic treatment. This marks a landmark decision, as it is the first medicine approved in the European Union specifically for this patient population, addressing a previously unmet medical need. The approval was primarily driven by data from the Phase 3 DeFi trial, which demonstrated a statistically significant improvement in progression-free survival, PFS. for patients treated with nirogacestat compared to placebo. The trial also showed a notable improvement in objective response rates and reported enhancements in patient-reported outcomes, including pain reduction and improved health-related quality of life. Common adverse effects included diarrhea, rash, and ovarian toxicity, with the approval following a similar decision by the FDA in November 2023. In another significant development, the tablet formulation of zanubrutinib, Brukinsa, has been granted approval by the EC for all its previously authorized indications. This regulatory decision aligns with the FDA's approval of the tablet formulation earlier in 2025. Zanubrutinib is now approved in the EU for adult patients with Waldenström macroglobulinemia, marginal zone lymphoma, and chronic lymphocytic leukemia, as well as in combination with obinutuzumab for refractory relapsed follicular lymphoma. The recommended daily dose remains 320 mg, administered as two 160 mg tablets. Safety data indicate common adverse effects such as upper respiratory tract infections, bruising, and neutropenia, with treatment discontinuation rates remaining low. Furthermore, 171 cell therapy, Zimcelpro, has received conditional approval in Europe for patients with hematologic malignancies who require allogeneic hematopoietic stem cell transplantation, HSCT, after myeloablative conditioning, when no other suitable donor cells are available. This authorization extends across all 27 EU countries, as well as Iceland, Norway, and Liechtenstein, with additional filings anticipated in other key markets. The efficacy and safety of 171 were evaluated in two independent prospective trials, demonstrating promising overall survival and progression-free survival rates, alongside manageable rates of graft-versus-host disease. Lastly, tislelizumab, Tevimbra, has been approved by the EC in combination with platinum-containing chemotherapy as neoadjuvant therapy, followed by tislelizumab monotherapy as adjuvant therapy for adult patients with resectable non-small cell lung cancer, NSCLC, at high risk of recurrence. This approval is supported by data from the Phase 3 Rationale 315 trial, which showed a significant improvement in overall survival and event-free survival, as well as higher rates of pathological response compared to chemotherapy plus placebo. Common grade 3 or higher treatment-related adverse events included decreased neutrophil and white blood cell counts. These approvals represent critical steps forward in providing advanced treatment options for cancer patients in Europe, underscoring the continent's commitment to fostering innovation in oncology. The medical community is keenly observing the real-world impact of these therapies, anticipating improved patient outcomes and further advancements in cancer care. The swift progression of these treatments through regulatory channels highlights a positive trend in bringing novel therapeutic solutions to patients facing serious diseases. And that brings us to the end of our detailed look at today's top stories. We've covered leadership changes, legislative battles, financial insights, and life-saving medical breakthroughs. Stay tuned for a quick recap and your final call to action. And that's a wrap on today's essential updates. We saw Adobe make a significant leadership appointment in the APAC region, the MORE Act reemerge in Congress aiming for federal cannabis reform, a deep dive into Adobe's ownership and insider activity, and crucial new oncology treatment approvals from the European Commission. Don't miss out on future breakthroughs. Hit that like button if you found this valuable, subscribe to Microsoft Sphere for your regular dose of essential news, and ring that notification bell so you're always in the loop. Share your thoughts in the comments below, and make sure to follow us on all social platforms for more insights. We'll see you in the next broadcast.